Hello traders and welcome to another video review. Today is Thursday, September 11th, 2025. Let's take a look at the Forex economic calendar for today. Overnight data were in form of the house price index in UK, minus 19%. The actual number was an expected minus 13% last time. Manufacturing conditions in Japan improved from minus 4.8 to 3.8 points, and that's about it. The Asian session were quite calm. Now we are waiting for the data from 10 o'clock, monthly IAA monthly report in the US, and OPEC monthly report is scheduled for this at 1 p.m. Turkish data are scheduled for this at 1 p.m. 1 week repo rate, overnight borrowing rate, and overnight lending rate. All of this data scheduled for this at 1 o'clock. At 2:15, major event of today, ECB interest rate decision and deposit facility rate decision, together with the marginal lending facility and monetary policy statement. The market participants expect the ECB to hold the interest rate at the level of 2.15%. Core CPI and CPI data from the US are scheduled for release at 2:30. Market participants expect an increase, generally increase from 2.7 to 2.9%. Initial jobless claims are scheduled for release at the same time, 2:30. And the ECB press conference will start 2:45 o'clock. At the end of the day, we got the ECB President Christine Lagarde to give a speech 4:15. Then we got the federal budget balance from the US scheduled for this at 8 o'clock, and at 10:30 we got Fed's balance sheet. So quite interesting day, especially for all of the euro traders. ECB interest rate decision 2:15, consensus 2.15%, no change. So let's take a look at the charts. How do traders positioning themselves ahead of the ECB interest rate decision? We start with euro dollar. So the euro dollar for our time frame chart is sitting on the edge of the lower channel line, just around 1.1673. Which is the technical line, which is called a simple moving average, right? And any breakout to the downside might be quite important for the bears, because the bears will most likely move it down towards 1.1608. The next technical support, or even 1.1577. In case of a bounce and a further movement to the upside, the next target is located at this level here, 1.1731 and 1.1781. So that's the situation here. Very calm market, low volatility, momentum below the level of 50 right now, 44 points only. So the bears have a slight edge right now here, and they are pushing the prices a little bit lower. Nevertheless, the lower channel line had proved to be quite useful for the bulls in the way up towards 1.1781. So maybe this time this same situation will repeat. However, please notice 2:15, interest rate decision, ECB interest rate decision, monetary policy statement, deposit facility rate. All of this data will hit the markets. The consensus is 2.15%. So we will definitely will have a increased volatility on the euro-related pairs, especially on the euro dollar. So we might see some kind of a different situation here in the next few hours. What is the pound doing? The cable down from 1.3589 down towards 1.3502. The market is going towards the 1.3482 simple moving average. Momentum has broke below the level of 50 right now, 47 points. So any further deterioration lower is in favor of the bears. Obviously eventually the next target is located roughly around, let me just adjust my targets to the levels to the newest data, Let me just move this technical support here. The technical support is 1.3457. So that's the situation here. And there is another technical support for the bottom of this consolidation, 1.3415. So that's the situation with the cable. Rejection of the rally and further movement to the downside. US dollar versus the Japanese yen doing completely nothing yet again. Very repetitive pattern right now on the US dollar versus the Japanese yen. Very repetitive trading behavior from the demand zone to supply zone, demand zone, supply zone, demand zone, supply zone, demand zone, supply zone, so on and so on. Oscillating market, the market that is moving inside only one direction. Only this is the sideways direction movement. So right now it looks like this. There is no change unless there is some sort of the fundamental trigger involved. So let's leave this market here. US dollar versus the Swiss franc. As you can see, very strong bounce from the lows of 7,914. We are back quite strongly towards the level of the other way around. We are back towards the level of 50% of the Fibonacci retracement, roughly around the level of 7,993, around 8,000 basically pips. 61% is located at 8,011 pips, and our size 55 points. So bulls are in charge of the market. They broke above the level of 50. If they broke above the level of 61, it will be the highest level since September 4th. So in 1 week. So please keep an eye on the current situation. It looks like the US dollar is gaining some strength against the Swiss franc. 100 pips moving average on a 4-hour time frame chart is 8,021 pips, and the technical line, the trend line, down sloping trend line, is roughly around 8,036 points. Obviously, please notice I didn't mention it yet. We broke above the technical resistance. We broke above this level. It used to be technical resistance. We are testing 50% Fibonacci retracement to be or not to be for the bounce from the lows of the 7,914 right now. So pretty interesting situation to keep an eye on. US dollar versus the Canadian dollar, again moving higher. It looks like the US dollar is in a good situation these days, as it is gaining across the board. This level is 1.3866. It was violated. It used to be technical resistance. It was violated. So let me just change it right now to the support. The market has a very strong momentum. US dollar is gaining, appreciating from the Canadian dollar against the Canadian dollar. There's a little bit of the room to the upside before we will hit the extremely overbought conditions. There's a little bit of the room to the upside here before we will hit 1.3923, the target for the bulls. So it looks like pretty nice situation here. Up should we go. And now, the last but not least, let's take a look at the crypto. We are looking at the Bitcoin 4-hour time frame chart. We broke above the technical resistance at 113,500, local high 114,487. Next target is the one that we know already because we've been talking about it for quite some time, 118,000 technical resistance level. So right now it looks like this movement to the upside is getting a little bit better. It's getting a little bit stronger. Nevertheless, it still doesn't actually looks impulsive. It looks like the biggest correction to the upside is like this swing here from that high to this low had been completed. Now this is the completely different cycle, and now the question is whether we are going to complete this cycle and continue to the downside. And that's my favorite scenario, because this bounce doesn't look impulsive. It looks like overlapping wave B in progress. So it looks like when we're done with this, the market should go lower. The biggest trigger would be, of course, the Fed interest rate decision in September, possibly. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.